This podcast includes information provided by the issuer and does not express the views of the interviewer. This podcast may also include forward-looking statements by the issuer that involve certain risks and uncertainties to its business. Because forward-looking statements are subject to risks and uncertainties, the issuer's actual results could differ from those indicated in this podcast. Welcome to the Planet MicroCap Podcast. I'm your host, Robert Kraft, and thank you all so much for the support and for tuning in to the Planet MicroCap Podcast. You can follow the podcast on Twitter at Bobby K. Kraft. That's BOBBYKKRAFT. And you are listening to episode 25. For this episode of the Planet MicroCap Podcast, I spoke with Cromwell Coulson, President and CEO of OTC Markets Group, Inc., which, by the way, is a publicly traded company, ticker symbol OTCM on the OTCQX. For full disclosure, I am not a shareholder. On past episodes, I've done individual interviews that covered OTC Markets, Reg A+, and the Jobs Act. And now I wanted to interview someone who could bring all of that together for me in the context of microcap stocks. What is the intrinsic relationship between all three of these concepts? Cromwell Coulson, in my opinion, has been at the forefront of bringing this all together. The goal for this interview is to explore this relationship of Reg A+, OTC markets, and microcap stocks, and how investors should understand these three concepts as a whole. Thank you again for tuning in to episode 25 of the Planet MicroCap Podcast. Please enjoy my interview with Cromwell Coulson, but first, a word from our sponsor.
A comprehensive streaming of market data, research, and portfolio management application for you. QuoteStream is a real-time streaming quotes and research system designed for the day trader, retail investor, institutional investor, both new and old. QuoteStream offers low latency, tick-by-tick data, advanced charting, comprehensive technical analysis, news, and research. With no software to install and no servers to maintain, QuoteStream is the ideal solution for you. Go to stocknewsnow.com and start your free 7-day trial. Click the QuoteStream banner in the header or real-time quotes in the nav bar to get started building and managing your investments.
For this episode of the Planet MicroCap Podcast, I have Cromwell Coulson, President and CEO of OTC Markets Group, on the program. Cromwell, welcome to the Planet MicroCap Podcast.
Great, Robert. Thanks for having me.
It's really a pleasure to have you on. We had a colleague of yours previously on the program, and just for everybody so that they know, what's your title at OTC Markets?
So I'm the President and CEO of OTC Markets Group.
Okay.
And I'm on the board of directors, but we have an independent chairman of the board, who's Neil Wolkoff, who's former CEO of the American Stock Exchange.
Perfect. Okay, so For this interview, we're going to be getting into the real meat and potatoes of it in a few questions, and I'm very excited to hear your answers on a few of these questions I have. But firstly, let's get into your background. Who is Cromwell Coulson? How'd you get into this business?
So I was a trader at a market maker in NASDAQ and OTC stocks. And, and really the NASDAQ market had come up as the top part of the OTC market, and they built an electronic platform. And, our firm specialized in trading illiquid securities and serving institutional investors, mainly value-oriented investors. So, so we saw a lot of smaller, less liquid companies. And, we knew the market structures, the pluses and the minuses of how NASDAQ worked then, basically coming into the industry in the late 80s, and how the exchanges worked, and how the non-NASDAQ OTC markets worked at the time. And, that was very frustrating, especially if you're trying to serve your institutional clients. The market was not transparent, it wasn't electronic, and there wasn't easy ways for investors to get information about companies. Now, all of those inefficiencies were an opportunity if you're a professional, but they also limited the market overall, because it was a closed private market where information would be kept away rather than easily spread.
Mm-hmm. So then I guess that's what led you to start OTC Markets then, is after that experience you probably saw these inefficiencies and thought, okay, I need to come in and do something about this.
Yeah, so, the best entrepreneurial endeavors are where you see a problem that affects you and affects, others in the industry.
Mm-hmm.
And so, what the whole over-the-counter market had been before NASDAQ was created was the pink sheet. So it was a paper phone book.
Mm-hmm.
And it was a relatively inefficient trading process where if you wanted to buy or sell stock, your broker would look at the pink sheets and decide who they wanted to call and call some brokers and try and find out what was the best price, and then go back to whoever had the best price and try and negotiate a better price. And, if there were only a few market makers, that was easy. If there were 12 market makers, your broker might easily miss the best price because they don't call all the market makers. And it was also a hard market for regulators because they couldn't see what was happening. Mm-hmm. So the pink sheets was moving off into obscurity, so I put together a group of investors. And we bought the old pink sheets with the idea to take it electronic so we could create better informed and more efficient markets. And it was a great time to do that because where exchanges and NASDAQ were built on heavy, expensive mainframe technology with closed private networks, the internet and IP networks were coming along. And a whole technology stack which made it much easier for a small upstart company to build an electronic trading market and then distribute our information out widely and connect. And the securities industry was going through an unbelievable change at the time of more and more electronic trading in equities. And so we were able to hook into that and bring those advantages to smaller companies and global companies.
Okay, so the main reason that I wanted to speak with you today is because there's this relationship brewing, or that's been established between Reg A Plus, which I've done an interview with on the podcast about that topic, OTC Markets and microcap stocks. And what I wanted to know from you, in your opinion, what is this relationship? I mean, it's there, it's simmering, but I wanted for my audience, so it's really clear, to really understand what this actually is.
So, from a big picture, our business has been really two things. One, we've been serving the broker community by creating an electronic trading market for brokers to efficiently trade securities. And two, for the companies whose securities are traded on our markets, we've created data-driven listing standards. And that's really important because if it's just brokers buying and selling securities based on supply and demand, that's the lowest form of market efficiency, just supply-demand. What you need for an efficient market is you need engaged companies providing current and consistent disclosure.
Right.
And that's been one of our most disruptive tools is we've created public markets that provide investors an informed and efficient investing and trading experience through online and institutional brokers. But we've done it using the power of the internet, the ability of where exchanges are like old-fashioned private clubs, where it's a heavyweight process to get in. It's very expensive. You have to do a ton of work, and the exchanges are always very nervous. Are you meeting our standards? And because really just wanted to become, and this is NASDAQ, has become a blue chip stock exchange to be an equal to the New York Stock Exchange. But for small companies, they're not blue chips. They may aspire to be blue chips, but what we've done is we've created our markets OTCQX, which has financial standards. You can't be a penny stock. You need common sense corporate governance, but it doesn't have all the heavyweight costs and complexity of an exchange that's $1 million plus a year. And then we've got our OTCQB venture market, and that market is really all about transparency, so investors can appropriately price risk. Because we see venture markets, the main goal of a venture market is giving companies and entrepreneurs a chance to succeed. And by that definition, you're attracting companies that haven't fully succeeded yet. And you can't use the traditional financial standards track record. You have to just really use transparency. So we've built these data-driven listing standards, which are really about putting information in the hands of investors so they can decide the merits of an investment rather than our staff decide the merits. And it's become a more efficient, cost-effective way to have a process. Mm-hmm. But with those two pieces, the electronic broker-driven market, and the data-driven standards for companies, we were missing a third leg of the stool, and that's capital raising, efficient capital raising. And if you look at the securities industry, in trading securities, there's been a huge development in technology to make trading more efficient and lower cost and more democratic. But for when companies are raising capital, it's still phone calls and face-to-face meetings with email follow-ups of closed networks of the wealthy and well-connected. It is an unbelievably expensive and inefficient process. So when Reg A came along, it is the first capital raising structure which is tailor-made for the internet. And Reg A, a big reason why we're supporting Reg A, and we want to see it more widely available, is that Reg A is going to allow technology to lower the cost of and expand access to capital for small companies. And companies will be able to sell their securities, raise capital, in the same electronic, transparent, technology-driven manner that Amazon.com sells books. This is hugely important.
Mm-hmm. And so then what is the role that you see OTC Markets performing with Reg A+?
So one part is we want to be the preferred secondary market for Reg A+ securities. Mm-hmm. It's a lower cost capital raising process, and we offer a lower cost, less painful public market for small companies. We also, because Reg A is new and disruption in regulated industries takes time, we want to be an evangelist for Reg A. Mm-hmm. Because while the regulators have created the structure for Reg A, for Reg D with general solicitation, for Title III crowdfunding, which allows online capital raises below $1 million, these are all new processes. They need the establishment supporting it. As we see the next leaders in capital raising for small companies is going to be the online portals, mm-hmm. empowered under Reg A and crowdfunding. Mm-hmm. And the investment banks that are building an online distribution network. And so these pieces we're just very excited about Reg A. Now the other point is we've filed a petition with the SEC because when Reg A came out, it was missing something. if you're a fully SEC reporting company, you can't use a Reg A. And this is, we understand why the SEC may have done it in the rulemaking process because the previous Reg A hadn't been for SEC reporting companies. But the new Reg A, especially the Tier 2, has so many advantages, and the ability to test the waters, the ability to do general solicitation and online offering, federal blue sky preemption, which allows companies to offer their securities anywhere in the United States without having to make a filing in all the different jurisdictions, is such a cost saver for both the companies and the brokers who are transacting in the securities. Mm-hmm. So we believe that we can really help all the SEC reporting smaller companies on exchanges and on our markets by expanding Reg A, because it is the online offering.
Mm-hmm. So as a follow-up real quick to what you just said, to your answer, I've heard, and I've done interviews with folks who've said, they wanted to start venture exchanges, new venture exchanges in order to accommodate Reg A plus issuers. What would you say to them who are saying that there's still that piece that needs to be filled?
So there's two parts of the world of venture exchanges, because it's great to have more choices for companies, mm-hmm. and that's fabulous if we can lower regulatory costs and have different options. America did really well when there's competition for small company markets between the old NASDAQ, before it became a blue chip stock exchange, and the old American stock exchange. Now, the problem is, and this is our problem with the venture exchange, the people pushing venture exchanges in Washington, they're trying to push a one-sided playing field. And what they want is for venture exchanges, for the government to give those exchanges a trading monopoly. Hmm. And they say that the only way for there to be liquidity in companies trading is you need to have the government require they just be traded on one market. And we think that's awful for competition. And we also think our market structure, which is not a centralized exchange, it's a lot like the old NASDAQ of the 90s, but with better technology and transparency, is also a good option. So we worked as part of the discussion with Congress to try and make the venture exchange legislation inclusive of not only the centralized exchange model, but also the organized OTC model, mm-hmm. which is because we're regulated as an ATS, an alternative trading system, but the people who are pushing for venture exchanges, they want the government to give them a monopoly, and that's been their view, and we just don't buy into it, and especially since, as I look at the data of how small companies trade, for a $100 million market cap NASDAQ company, 80% of the investors are self-directed individuals. Mm-hmm. That's their shareholder base. $250 million market cap, it's 2/3 is self-directed individuals. Self-directed individuals almost all go through online brokers. Mm-hmm. That's where they come from. Online broker order flow doesn't get sent to exchanges. It gets sent to competing market makers.
Right.
Because the online brokers want liquidity at a competitive cost and with a level of customer service. Mm-hmm. So the idea that the way the market functions today, we should suddenly rip to pieces and say, oh no, there's only limited liquidity, and we need to centralize it, and we need to, give these exchanges a lot like a New York City taxi medallion, where they're the only limited firm that can offer these services. It's just not a great idea. So, that's the part of, it's great to say, we want more secondary trading, but almost everybody pushing venture exchanges has an interest in starting their own venture exchange only if the government gives out monopolies, which is, not very American.
And also, as an investor myself, I'm an investor. I'm not necessarily a trader. It's not like I'm going to be going on and buying and selling stock every day. So it seems like for those who are, maybe long-term shareholders, it doesn't really make sense. I don't know. What do you think?
Well, there's a whole debate. Everybody wants to be a long-term shareholder. They don't want short-term speculation, except when they want to sell. They want to sell right now and quickly.
Right, of course.
And so there's a lot of discussion in markets where the debate is, how do we make the market only include good investors, which many investors seem to put in two categories. People exactly like me, and then people who will immediately buy my shares when I want to sell, all of them with no price effect.
Right.
And with markets, it doesn't work if you're limited in a market. What you need with markets is you need a big tent. Because I believe in small companies, often liquidity doesn't exist, and you need market makers, you need dealers, pricing and providing liquidity every day. And that was one of the great parts of NASDAQ when it used to be an OTC market before it became an exchange. But they had to, because they had these big blue chips, which do have a lot of liquidity, and you build a different type of trading system for those because they're securities that can trade thousands of times a second. Is those type of securities are very different than smaller companies. So what you need in the market structure is, even if you are a long-term investor, you want all these other investors in the market at all times, because you want the largest, widest, most accessible market as possible. And you're going to need some speculators, you're going to need some short sellers when there's only buyers, you're going to need some market makers who are matching liquidity and pricing, and you're going to need some long-term investors, you're going to need some short-term investors, you're going to need some value investors, you're going to need some growth investors, you're going to need some passive investors, you're going to need some activist investors to make a market have the best price efficiency and liquidity.
So then this actually leads into my next question. Then how does OTC Markets then help with that currently? And then how are you guys also helping to do that for Reg A Plus issuers?
So, I think you can look at Elio share trading, has enough liquidity for the shares they need for their shareholders. What we've always focused on is the two core groups of investors in smaller companies have been self-directed individuals and smaller institutions. So our market is built upon providing a great platform for the brokers who service those types of investors. A Merrill Lynch stockbroker, they're looking at selling a wrap account service. They don't want their brokers selling $200 million market cap biotech stocks to their clients. They want them selling index funds, safer, more complex products that they can charge more for.
Right.
So, but the two groups you see lots of investors coming in through online brokers, and those online brokers are also serviced by the large electronic market makers, KCG, Citadel, Susquehanna. those firms that process order flow very efficiently. They provide best execution. They provide competitive liquidity in the market all day long. And they're providing great customer service for execution of small orders. And then there's another group, which is the mid-tier institutional brokers. And when an institution is trading in a less liquid security, it's still a pretty high-touch business. There's a lot of not-held liquidity. There's a lot of highly skilled industry participants working orders, sourcing liquidity, going around and trying to find the other side of a trade, either from existing holders or telling the story out to new holders. That's a real job that brokers do. And so we built this market, which works really well for those two types of groups. And it also works well for firms that are prop trading. This is important especially important actually in ADRs and companies listed on the Toronto Stock Exchange or the TSX Venture. We need the cross-border trading firms in to create efficient liquid markets. We've got some of the best in the world on our platform. Mm-hmm. But there's also firms proprietary trading who specialize in community bank stocks, who specialize in industries, who have good institutional relationships in the biotech space. And having a market that works for both of those types of firms is really important. And that's been our focus. And if you look at what is the investor experience through their online broker in our market, it's quite fantastic. I mean, it's much better than an investor would get trading U.S. Treasury bonds, corporate bonds, or lots of other things. The idea that a company, that their shares can be traded through E-Trade for $7.95 a trade, is with an E-Trade investor having tons of information and tools at right in front of them on their computer or their phone is a fabulous thing.
Right. So then, one question that I do have also is, would you say that is the OTC markets more user-friendly for Reg A Plus issuers than NASDAQ or the NYSE?
Well, I think we're lower cost, we're less complex. Mm-hmm. And you have to put it, we have hundreds of community banks that are traded on our markets mm-hmm. at various stages of public interest. But as I talk, we've got, I think, 80 on our OTCQX market, and these are the most engaged, and they trade the best. But as I talk to the bankers out there, everybody knows banking needs to be a regulated industry, but they also know there's too much regulation. And if you're a small company, you can list on a blue chip stock exchange, but you're spending $1 million plus a year in outside and internal costs. And those are resources that you could be putting into your business, putting into shareholder value. Mm-hmm. And you're doing a lot of things which may be right for Citigroup. It may be right for any of the companies in the S&P 500. But it's not right for smaller companies. They don't have the bandwidth. So for us, we're taking a different approach. And it's an approach that many internet generation businesses have taken. Instead of us deciding the merits of investment, we want to make sure that investors have the information on their screen to make their own judgment mm-hmm. on the merits of an investment, mm-hmm. and that the market price can be efficient. And by doing that, by being at service to the information, we can lower costs for companies in creating an efficient and informed public market for their shares. Mm-hmm. Now, there are important segmentation. OTCQX, you can't be a penny stock. You need to meet certain financial standards. And you need a baseline of corporate governance that are, established best practices. But do you need to be doing the same things that Citigroup is doing? A giant, complex, a complex company with that's at a totally different stage.
So basically, the argument then for why it's more user friendly for these Reg A plus issuers, because most of them are really small companies. It's a lot. It's more cost effective. And it just won't be so straining on them for the business. And so,
it's a good enough product for you.
Yeah.
And if you look in the history, whether it's Salesforce versus SAP. SAP made a fabulous product, but for small companies, if you bought SAP, you'd put yourself out of business. Between all the internal resources to support an SAP system, all the consultants you needed to hire, and then the money you'd have to pay SAP. Salesforce came along and created a CRM system that smaller companies were able to turn on very quickly, and it wasn't a nightmare to keep going. And you're seeing that across the world. People are becoming much pickier about where they choose to put their resources because it's a competitive world, and you can't just buy the super expensive one that sucks up all your time. You need to buy the right size today.
Right.
And and what Salesforce.com did to SAP by having a lower cost web-enabled offering, which really put the data in the user's hands, it's incredibly important. And there are so many companies that are using the platform model where you still have to do the basic checks of companies coming in, which we do with OTCQX and OTCQB, but you're putting more of the decision-making and validation process in the user's hand. And that has the ability to democratize the process and lower the cost for participants. Because really, I testified to the SEC's Equity Market Structure Committee and their Quality of Markets group about small company liquidity. And they just announced that the main problem is not market structure. The main problem is that it costs too much and it's too painful for small companies to be public. And that's where the venture exchange legislation, it's pretty incredible. You've got these people pushing venture exchanges, and they will tell you hours about how the trading process should work instead of letting market participants choose, which is, not very free market. But what they don't tell you is how they can create exchange listing standards that can lower the cost to companies. Because they know once they have a monopoly on trading, it doesn't really matter.
Right.
We've got this system, and, I think it's incredible that fully SEC reporting companies don't have a blue sky preemption across the country.
Right.
And why the SEC at the staff level hasn't done that to save money, to help companies save money, to make it less complex for brokers. But we spend all this time, we talk about market structure, when for public companies it's cost and complexity. Right. It's too painful to be public. And, I feel a little bit like the guy from Dollar Shave who's sitting there saying, why are you paying so much for a razor? Why are you putting all this money into marketing and advertising when really you want the basic services? You want the brokers who your investors, existing investors and potential investors want to trade through to be able to trade the security efficiently. You want your information distributed out to all the financial networks, the Bloombergs and Thomson Reuters on the professional end, the financial portals, the online brokers, the newswire services. You want that information distribution. You want to be able to demonstrate your company's regulatory compliance, and you want to be able to tell your story. But you want to be able to do that, in an online, data-driven, and social manner.
Right. You're bringing up a lot of points that I've actually just did some interviews recently with some other investors too that are saying the same thing, is that it's really expensive to be a public company. And you hear why they're saying, I don't really know if I really want to be public right now. It just and it's really because of a lot of what you're saying, is that it's very complex and not cost effective. So so I get it. I hear exactly what you're saying. You got the cost effectiveness and it's less complex to come on to OTC markets. But what have been maybe some of the concerns raised to you about Reg A Plus issuers listing on OTC markets, and how do you answer them?
Yeah, well, some of the concerns have been traditionally Reg A Plus is totally disruptive.
Right.
Online securities offerings, they're different. And those sides are, the existing financing markets where they work aren't looking for something new. Now, Reg A Plus also, the platforms are not yet developed. The professional advisors in the space don't have playbooks to successfully do Reg A Pluses. And if you look at how it's going to grow, I was just looking at numbers from a leading UK crowdfunding platform, and they've been doing crowdfunding since 2011. So that's 5 years ago. The first year, they only raised a little over $2 million in 13 deals from 800 investors, and there's only one deal over £1 million, just barely. 2 years later, they did 49 deals from 5,000 investors, and they raised $11 million. They had two over $1 million ones. Last year, they funded 166 deals, 84 million pounds worth. 20 deals were over $1 million, and it was 43,000 separate investments. That's the only way you're going to get that scale is online. And the only way, which is, there's a little bit of fake selling in the small company space, which is there's a lot of advisors who say, pay me up front, and I'll get you a bunch of institutional investors.
Right.
And they try to get as much money up front or paid every month, and to put small companies in front of institutional investors who, be straightforward, the company's too small for. The company's track record's too early. If you're a big institutional investor, how many $20 million or $50 million companies can you invest in?
Right.
And so companies put a lot of resources into chasing these institutional investors who are supposedly out there. And instead of building their crowd, building their community of investors, building the individuals who believe in their story. And those individuals are going to come through the online brokers. Those individuals you've got to reach electronically. And that goes back to another loop piece is small public companies today do almost, and whether it's on our market or NASDAQ or New York Stock Exchange, they do almost all of their financing in the private space. Because over the phone, a small firm, you can't reach the small investors. They've moved to the E-Trade channel in secondary trading. Is But we've got public companies who are doing all the expense of being public, but doing their financing privately still. And that's ludicrous. Mm-hmm. We should have them doing their financing publicly, because if they're able to do that while they're marketing those shares publicly to investors, they're going to be building their brand. They're going to be getting more value out of being public. And this goes back to our Reg A reason. Reg A, when Elio Motors went public, they spent $50,000 in online marketing approximately for every $1 million they raised. But they just didn't get money for that. What they got was they were putting ads in front of every potential customer for their company. They were building their brand with the press. So they built for $50,000 of each $1 million they raised, and remember, brokers charge that much to sell securities, over the phone too, or more, is they got real marketing. And they got much more value. And they did it because they were selling their securities publicly instead of privately.
Mm-hmm. So, just to play devil's advocate, what would you say then to, let's say, like a small biotech that's looking to, do a Reg A plus deal, because they would have it would be a little different for them because, they're probably going to be preclinical or maybe even going to a phase 1. And it's different than Elio. Elio has got the cool flashy car that you can see how it works. But then you juxtapose that with a small biotech that maybe has a video that shows what they're trying to do with their molecule. What would you say to them?
So what I would say is, if you don't have the ability to build an online community supporting you, mm-hmm. Reg A is too early for you.
Gotcha.
But if there's a disease community and you're going out to solve a disease, mm-hmm. or you're going out to solve a pain point that you can get people to believe in, mm-hmm. and you're willing to go tell your story, to market it, mm-hmm. crowdfunding is going to be fantastic. Mm-hmm. It is going to be great because you do a successful crowdfunded securities raise, and it's going to be tough in the beginning because we don't have the infrastructure. I mean, if I wanted to do a self-published book today, I could just put it on Amazon and someone might find it because there's so many Amazon users looking around for good books.
Right.
Amazon 20 years ago or 10 years ago, if I'd self-published a book, it wouldn't sell at all on Amazon unless I was out there marketing myself every day. So we're going to have in 3 to 5 years, the same way the UK crowdfunding platforms have hundreds of thousands of members, we're going to have platforms, online capital raising platforms, but we're not there today.
Right.
And we're going to have professional advisors who know how to reach investors online, how to harness the power of the crowd efficiently. So not only do you get capital, but you market your company. You tell your story electronically. Right. And that's going to be the huge disruption.
Okay, so you actually touched on my next question just a little bit. We talked about how...
One piece, though,
sorry.
I would like to talk a little bit about liquidity.
Oh, let's go for it.
There's a lot of companies that will blame the market for their lack of liquidity. Mm-hmm. And, we recently had, which really was, we saw the marketing effect of Nintendo's ADR trades at our lowest market, our pink market. But and Japanese companies are kind of funny, they only do product marketing, they don't do investor relations in the U.S. But, the Pokemon fever came and Nintendo trading both on the Tokyo Stock Exchange and in our market exploded up. But we are seeing 20,000 trades a day in Nintendo ADRs. Mm. So, if, this whole idea that investors can't, if they know about something and they believe in a story, be able to trade it is ludicrous. Mm-hmm. There's no liquidity on our platform. Ludicrous. Mm-hmm. Nintendo traded hugely efficiently, and that's because of the great technology and liquidity provided by the market makers on our system. But for smaller companies, they're going to trade based on how good they are about marketing their story and engaging investors in both the opportunity of the company from an investment standpoint and the cause. And smaller companies, actually, if you're good at marketing to smaller investors, you don't need as much liquidity, because small investors only have a little bit of shares to sell. And if you're good at marketing to small investors, those little trades make it easier for big investors to come in and out of the stock without people seeing their tracks.
I'd like to say an amen to that, because when over at Stock News Now, that's we see that mentality every day. We can tell the management teams that know how to market their story. They know how to properly present it. And while I stay unbiased, you can, as an interviewer, I can tell which ones have either done this before, they have the passion, and really know what they're doing. So going back to this question that I had, though, regarding Elio as the Reg A Plus success story so far, and how they chose to list on the OTC markets, and again, you've addressed this a little bit already.
They chose to be on OTCQX,
right,
our highest market,
right.
And Elio is a very fast, rapid story. Most small companies are not going to be the Elios,
right?
And online capital raising is going to help the smaller companies that and also the companies that aren't unicorns, that are maybe young racehorses, or they're workhorses growing at 10 or 15% or 20% a year. Elio was interesting. Reg A worked for them because they knew how to crowdfund.
Right. So then why do you think the Reg A Plus acceptance or adoption rate in the U.S., at least by investors, is a little bit slower than expected? Why aren't there more deals then getting done?
So I go back to the UK.
Mm-hmm.
When crowdfunding started, there was 13 deals done the first year. So, and then only one over $1 million. Mm-hmm. Elio blew that liquidity. They only raised a little over $2 million. Mm-hmm. The next year they only did $2 million. Things were figuring out. But the number of deals grew. And then the next year they got to 11 million pounds. 2 million pounds and 11 million. Then the next year they went to 36. Then they went to 84. And this is just on one platform. And, so crowdfunding went from 28 million pounds in the UK in 2013 to 245 million in 2015.
So you would say it's really just a herd mentality. Once we got one, there will be more, basically. And once there's more,
one, and they were the Wayne Gretzky of knowing how to put the puck in the net. I mean, they were just born fabulous at that because they'd been crowdfunding their product.
Right. So
they knew how to use. They had the skills coming in. Other companies coming in, we don't have in the professional advisory place or the platform or the community of investors the skills yet. And it's not that the professionals in the space aren't good. It's just they haven't done enough deals to have a playbook to know exactly what works and what won't work. Mm-hmm. And, they're going to find out what works, and then they're going to find out 3 different things that don't work.
Right.
But we know where this game is going. We just don't know when and how or how fast.
So I was going to ask you about the pros and cons of Reg A Plus, but I feel like we've pretty much addressed most of those. So,
I mean, Reg A Plus, you just have to think of, it costs less.
Yeah.
It is to do a Reg A Plus offering, number one. Mm-hmm. So however you do your offering, it costs less. Number two, you get a tradable security afterwards. Mm-hmm. Tradable securities are worth more than the restricted securities. Mm-hmm. And it is a more easily tradable security because there's a qualified offering document at the SEC. Number three, you get a choice afterwards. You can either do the Reg A reporting, which is less complex and lower cost, or you can become SEC reporting. Your choice, whatever you want to do. Number four, you can choose what market you want to be on. You can go to NASDAQ, you can go to New York Stock Exchange, you have to become SEC reporting, and you're going to have a whole bunch of other expenses. It's going to cost you $1 million a year as long as you're listed there. Or you can go to the OTC markets, or you can, not be publicly traded. You've got those choices. If you want to be going back into capital markets, you're probably going to want to be publicly traded, especially if you're good at raising capital from the crowd, because as a public company, you need to be able to keep telling your story and creating value for shareholders so your crowd expands. Mm-hmm. And having a public vehicle it's great because you have your information going out. Now you're going to have some not fun moments when you're not being as successful, or things are taking longer time, or revenues are not appearing quick enough. But every company goes through that. You will have terrible times as a public company, but the good part about being public is you're going to have to recognize these things are happening and address them, because you're going to be putting disclosure out there. You're going to be hearing your biggest fans and your harshest critics. Mm-hmm. And you're going to get better because of that.
There you go. All right. Well, then what do you think then? Because it seems so simple. It makes a lot of sense. But what do you think then is the most misunderstood details about OTC markets and even Reg A Plus for that matter?
I think from OTC markets and it was the exact same thing that happened to Salesforce, mm-hmm. with the exception that, our market for the brokers, they want us to be able to trade every security. We've done a really good job of making it easy to understand the pink securities, and brokers put a lot of risk controls around them. And especially, brokers block trading in stocks that in pink securities that don't make disclosure. They also they restrict trading in those, and they block trading of securities of pink securities we mark with a caveat emptor flag. So we've done a really good job of the pink market, which looks a lot like Craigslist, of putting better data out there for brokers to put risk controls on. Mm-hmm. But the second thing is people don't understand what OTCQX and OTCQB, the success they're becoming. And they also look back on the NASDAQ in the 90s. And they don't understand that NASDAQ was successful for two reasons. One, they weren't an exchange. They were a network of competing brokers. And that worked well for small companies. That competition was great. It created diverse liquidity providers and execution providers, lots of choice for investors, and technology linked it all together in a virtual world. That was completely ahead of their time. And then there's a second part, is they had more flexible listing standards than the New York Stock Exchange or the American Stock Exchange. So they could handle earlier stage or riskier securities, and they were also lower cost. So that ability they had, and there's And at the highest levels, though, regulators gave the same privileges of exchange-listed blue chips to NASDAQ's blue chips and or larger companies. So you had this structure which people look back and say, oh, NASDAQ was all these great companies, but the American Stock Exchange looked down on NASDAQ. The New York Stock Exchange would say the same things about NASDAQ companies that people will say about OTCQX or OTCQB companies, or even pink companies. And that side is, and that's a standard of any disruptive, any more democratic system, is because we're giving companies with our markets the opportunity to distinguish themselves. We're not trying to sell them our expensive brand and all the costs that go along with it. We're trying to create the basic tools of a public market so you can be efficiently priced and get on with your business. And none of the other stuff. Mm-hmm. And there are some people who came into the industry who are always going to be snobbish about markets. And, we have on OTCQX, we started out chasing some of the largest, global brands. We have, great companies such as Roche and Adidas. Their ADRs are on OTCQX. We have lots of leading community banks. And all of them are able to use the disclosure-driven standards of OTCQX to tell their story and let their reputation show through with electronic transparency. But there's others and people who are concerned about their reputation. They want to pretend they're something they're not, or they want to get an aura for the New York Stock Exchange or NASDAQ, or they want to look down at companies on our market. But most of the ones who look down on companies on our market, they're never going to buy a small company on NASDAQ either. They're just buying index funds.
Right.
So, the perception for us is we deal with it every day. The same way SAP and Oracle badmouth Salesforce as a toy, not for real companies. But our product and our platform is getting better every day. Our OTCQX and OTCQB markets have been recognized by 4 states for blue sky, and we think we're going to get a lot more by the end of the year for secondary trading. And, we're following the playbook of building the NASDAQ of the 90s with today's technology and transparency.
Cromwell, because I talked about this a little bit with Jason and when I interviewed him, and based on what you just said, it makes so much more sense about because I always questioned why companies are uplisting. There's been this uplisting craze right now, and to me, I'm thinking to myself, it seems like they're only really doing this based on reputation, because at the end of the day, there's now going to be a lot more capital intensive, because you always hear every time like, oh, you should only uplist when, you want to do like a big financing and do all that. And you have some big news coming out. But now what it doesn't really, like, why? Why can't you do?
So actually, I think the uplisting discussion, there's a couple reasons people we see pushing for people to uplist.
Right.
In the pipe space, there's lots of pipes providers who are short-term structural investors, and they will go to a company and say, I will provide you funding, but as part of it, you need to uplist. So we can do a promotion about your great prospects, and I can, and I can, sell my pipe shares.
Right.
And they will tell the company the only way they'll say, I'm an institutional investor, and the only way you're going to get more institutional investors if you're on an exchange. And what they don't say is the easiest way to keep true institutional investors investors, I mean the fundamental investors in the space, away from you is to have a pipe in your capital structure. But the pipes guys don't care because they're gone by then. Right. So they have, it's a pretty easy trade if you're in the pipes business of finding an OTC company, invest a pipe in them privately at a discount to their shares and tell them to uplist, and then the company is stuck with the cost and complexity for years. And they're orphaned on the exchanges. Number two, the advisory community. The SAP installers, all the advisors and consultants you need to hire to put an SAP system in at your company, they made a lot of money. They were hugely negative on Salesforce. And, most of your expenses of being an exchange are not the exchange fees, even though for OTCQX we charge less than half of NASDAQ's lowest fee, and for OTCQB it's less than a quarter, it's all the extra advisory fees. The lawyers, the board consultants, all of this process, the internal expenses. So, of course, if you're an advisor, getting a company to uplist is pretty good. Yeah. It's more business this year, and it's more business next year.
Yeah.
So for companies, what we see is we're building, though, on the cost-conscious companies. Right. The ones that know it's too painful to be public. And in the community bank space, we're stealing more community banks from NASDAQ than our uplisting, because we've built a really good tailored market that fits the needs of community banks. And my hope is, we love graduates from our markets. We create the most graduates in the world of any venture market. Mm-hmm. We blow away the TSX venture. We kill the AIM. We've had, in the last 3 years, over 200 graduates from our markets. Incredible numbers. But what we want to do is build a runway that gives them more time till they graduate. So when they do go to an exchange, they can afford it. That the cost and complexity is not a problem because they've become a big, successful business.
But Cromwell, at the same time, as an investor, I'm thinking to myself, well, wouldn't I rather all those extra costs that it does cost to be a public company, even if they're continuing to grow and they're ready to uplist, to a quote-unquote bigger exchange, well, why wouldn't I rather them just stay on OTC Markets then? I mean, that's still then less money. That just keeps the cost down for being a public company, and yet the company is still growing. I mean, as an investor, as long as the price then continues to go up, why should I care?
Well, I think the big point is when you're big enough to be in a major index. Mm-hmm. And I think at that point, there's a fair amount of excess capital that will own you if you go to an exchange. Now, the index providers used to, and I think in the future, if we have a bunch of great companies, the index providers are going to be owning stocks in our market too. Because you can't have a Wilshire 5000 with 2,000 stocks.
Right.
And that part is, and that's really, this playbook is, whether you look at it in NASDAQ's history, which was a super successful playbook, but now they've become a blue chip stock exchange. Mm-hmm. Whether you look at the Salesforce, or you look at more recently what Dollar Shave has done, or Airbnb, all of these disruptive, or Uber, all of these disruptive technology-driven platforms have had a playbook, and they're all looked down upon by the establishment. And I can understand the establishment snobbery. I mean, I grew up in Greenwich, Connecticut, so, and I always saw it as a different viewpoint, because I always saw the people who I grew up with, snobbery limited your potential, limited your opportunity. It closed doors to you. And while it closed doors to other people too, from the inside, the establishment is You want to be open and welcoming. But that side of it is disruptive. The definition of an entrepreneur is someone who scares the establishment. And we need to build public markets to have more of those, more innovators, more entrepreneurs. We need to build public markets where the local community bank is not spending $1 million a year on compliance fees that isn't related to being a bank. That just doesn't make sense. We need to give managements more time to be growing the business and creating value for shareholders.
I agree. 100%.
And we're only going to do these things. We're not going to do this unless we use technology and online distribution of information.
You know, it's funny because I know OTC Markets has been around for a while, but it's still not that long. If you look at it, the greater scheme of things, you know, it is still growing. It's still going through those adoption rates and those growing pains. You know, just like you've been saying. You know, and
regulated industries are the hardest industries for technology to disrupt.
100%.
And you know, for a regulated industry, it is going to take longer. Mm-hmm. You're guaranteed. Mm-hmm. And you know, that's the part for us is we're following a playbook. We know the things that, you know, are important. You know, our strategy is pretty straightforward as we want to become a world-class operator of securities markets. But, you know, our approach is a little different, because we're all about connecting broker-dealers. We're not about creating a centralized trading monopoly.
Right.
We're all about using our market standards to inform investors and help them price risk. Mm-hmm. You know, we're about being at service to information, to companies' information, rather than being the nanny state. And those parts are, you know, someone at Christie's is always going to be more snobby about eBay.
Right.
Especially a Christie's or Sotheby's Blue Blood. Mm-hmm. But eBay has created a whole new process of value for property. And that's what we're trying to do. We want Reg A to succeed. We want crowdfunding to succeed. We want SEC reporting companies to be able to efficiently raise capital online from the investors who are buying and selling their securities in the secondary market. We want more competition and transparency in the pipe space. It is unacceptable that public companies, smaller public companies, are still doing most of their fundraising privately. That should not happen in a democratic society. We need to lower the cost of being public. We also need to lower the cost for broker-dealers. Regulatory costs are killing broker-dealers. We need, you know, but we need to make, you know, we're only going to be able to do that with technology.
Right. So to kind of finish up a little bit, and we could go on for another couple hours if you'd like. I'm available. But to kind of wrap up, you know, what would you say? How should investors look at the relationship between Reg A Plus, microcaps, and OTC markets as a whole?
Well, I mean, I just think we want to be the leading market for Reg A issuers, and we're going to do it by being the most cost-effective one, and the most online, and the one that gives a great experience through the online broker channel and through institutional brokers. And we're going to do that by having data-driven market standards, and we're going to have the biggest tent of markets by connecting a diverse community of broker-dealers and aggregating liquidity, but also supporting the market maker model, because they're the only entities that can create liquidity in securities that don't have much. Mm-hmm. but also supporting the institutional broker community who can source liquidity. And, and we want to be at the forefront of pushing forward regulatory change so markets of the future can take the best of man and machine to provide capital and opportunity.
To finish up here, where can our audience go and find more information about OTC Markets and Reg A+?
OTCMarkets.com is our website. Our symbol is OTCM. We're traded on our best market at OTCQX. I'm the largest shareholder. I am, am a long-term investor as well, and all of our employees are shareholders too, who are with us for any amount of time. We're a big believer in being public, and you can also follow me on Twitter at Cromwell C or at OTC Markets. At OTC Markets is our corporate Twitter account.
Cromwell, thank you so much for coming on to the podcast. I really do appreciate it.
Thank you.
Thank you all for tuning in to the Planet MicroCap Podcast, and thank you, Cromwell, again for coming on to the program. You can access the podcast by going on to stocknewsnow.com under podcast, go to podbean.com and search Planet MicroCap Podcast, or on iTunes and search Planet MicroCap Podcast. Stay tuned for the next Planet MicroCap Podcast, where we'll have our next guest to discuss all things microcap. If you have any questions or comments about the podcast, please send an email to info@stocknewsnow.com. I'd love to hear from all of you. This podcast has been brought to you by SNN Incorporated, publishers of StockNewsNow.com, the official microcap news source, and the Microcap Review magazine. I'm your host, Robert Kraft, and thank you again for joining me on the Planet MicroCap Podcast. Have a great week, everyone.